Okay, 5, 4, 3, 2, 1. Wait, what's this called? Big announcement coming soon? Oh, yeah, 5, 4, 3. Welcome to the Big Announcement Coming Soon podcast. I'm Michael Bull, joined today by David Collette and Jeff Renson. Nick is away today. Something about, he said he's got to go to NAM or coming back from NAM. So he had some issues at the airport. You guys may know he's in Thailand. So really, that's just like a 15-minute hop for him.
Yep, he's gone to the airport 3 times today, I think.
Is he getting lost somewhere?
Yeah.
Poor guy. Maybe he's getting a new airport NFT or something. So we're not going to be talking much about NFTs, I guess, today because we don't have Nick here. So is it maybe we just don't care about it unless he's here?
Nick and I dropped a new piece this week, and then we're kind of making the conversion where we're coming out that we've been doing all this art together, but he's, I wasn't ready to step out, and now we're publishing stuff and kind of putting my name on it. I'm ready to be an artist more with him now. So that's been going on. And I know he got the 6529 drop again. So he has the craziest NFT luck, and hopefully the airport runs have not conflicted with anything else, because those are now like a Monday, Wednesday, Friday drop like he's been talking about, and
wow,
it's full on. But yeah, next week we'll have a lot more on NFTs.
Okay.
Mm-hmm. And I would throw in an NFT. Kampai Pandas moved to number 9 in floor price currently, so that's pretty cool. Newish project, not new, but the only chain, multi-chain, not the only, but like one of the first multi-chain NFTs, and I happen to be a holder of Kampai Pandas. Pretty pleased with them. They're pretty awesome. Got a PP Dex coming out next. Gambling casino style available for pandas. Get panda points. So there's some NFT news for us.
Nice.
Congratulations. And I continue to think NFTs are just silly.
Yeah, no, it's a whole new ecosystem in business now, right?
No, but if you can just make money off it and speculate on it, okay, sure, it has a point. But otherwise, it's just like somebody drew something.
You just wait till the Harley Davidson people and I don't know, a gang adopts NFTs as their blocks, as their representation, and then they're gonna be all pissed at you, and then
Probably.
I'll be like, haha.
Or the Hell's Angels on Polygon.
That's the one. Exactly.
There you go. All right, we'll head into the first article today. It's mine. Coinbase stock rose 70% in January alone. Can the rally continue? And so it's kind of interesting to see that that's a surge. Is this an indicator of sort for the Bitcoin or the crypto market generally, and that the newbie stuff, the people like me who are going to get into, don't really want to hold it ourselves, want to hold it somewhere, preferably someplace it's not going to go under, like BlockFi, FTX, etc. Is Coinbase the safe place to be, like they say they are? And so has that marketing strategy worked? And what makes them safe is they're not taking crazy loans like BlockFi did?
Yeah, that's been the argument.
Mm-hmm. They actually keep it separate. That you have the ability to do stuff like that. And in the same way that Gemini Earn went under and Gemini didn't, they're running a legit business. Sorry, David, you were going to start on Coinbase.
But it's more legit in that Coinbase and then Kraken as well. They only will give you 1% or something small like that. It's even less than these days what the holding bonds and treasuries and stuff will give you, right? So, they're clearly not making money on anything.
When you say 1%, you mean their Earn program just gives basically treasury rates or lower the treasury rates.
Exactly. So you've got to imagine the people who they're putting their money with are relatively conservative, probably big names, market makers, things like that. Probably their own exchange market making. But then other exchanges are like, all right, sweet, I'm going to trust 3AC. They're offering 15% rates, and I can give my consumers 7, and I'll take 7, and then we all blow up. So at the end of the day, Kraken and Coinbase, by being boring, have kind of essentially afforded the subprime mortgage situation, where at that time all banks had to do the same kind of running on the hamster wheel, because if you didn't, you just went out of business. And so everyone blew up at the same time because no one could not do it.
You're talking about 2008 financial crisis.
Exactly, yeah. Whereas in this case,
And one thing that's always said about the blowups is FTX was making, millions every day in trading fees. Why did they also do this? Well, people complain about Coinbase fees. They're not low. Coinbase exists, right? They're doing the thing we all say we wish every exchange would do, which is take your fees, keep the crypto on the exchange. Right. And I do think with their stock price going up and down, there's the speculation on will crypto continue, and then will Coinbase, because I think the bet on Coinbase and I don't hold coin stock, is crypto is going to be here for the next 50 years. Coinbase might not be the flashy new one for everybody, but I keep crypto on Coinbase because I've been here a long time and I understand that it's pretty safe. And I hope I don't eat those words in the next couple hours or weeks, but it'll be
No,
here.
yeah, I mean,
And the stock will
exactly.
be here.
Like
And it keeps
way
earning
back
it.
in
Yeah.
They don't have the
way back in
exposure,
crypto.
the negative exposure that we were talking about with other groups, kind of like BlockFi, et cetera, that they farm their money out. So basically, anybody who offers a big, huge percentage back, an interest rate return, is probably going to burn you. At least that's history.
Yeah, exactly. That's basically what we've learned in this recent cycle. But I mean, I think it's almost like lore. You can like go back in time. So like back in the time, people trusted Mt. Gox because it was like seemingly the easiest place. I wasn't around at that time, but easiest place to store your funds if you were relatively noobish and didn't want to like create a whole like, node and wallet and things like
Right.
that.
It was quite difficult in
And
those
then,
days. Yeah.
Mm-hmm.
yeah, totally. It had to be pretty nerdy. So this was seemed relatively safe. Of course, it wasn't, but a lot was kind of learned from that. And then you kind of saw real exchanges kind of pop up that have lasted to this day: Bitstamp, Kraken, and Coinbase. And then so way later, you got all these other exchanges that kind of like climbed up the mountain. So Binance only came out in 2017. But these guys have kind of built a lot of the infrastructure behind the scenes over time. And it kind of always just are the places that survive. And the thing about Coinbase is it's hard to be bearish. Like Kathy Wood stole her Coinbase stock at the very bottom. I think it was at 40 or 26 or I don't know, something like that. And then the next day, BlackRock announced a deal with Coinbase to do their to do the crypto institutional
Bitcoin, right?
custody, which is huge. Like BlackRock, so you have Circle working with Coinbase, which is also backed by BlackRock. So this is like a, very anti-crypto situation, if you will, because these are the enemy, if you will, but also the safest place to have your money at the same time, if you don't mind being known to have money places.
So more like a traditional bank in a sense, other than not really regular.
Yeah, I have plenty of self-custodied crypto, but when I go back out, it's through Coinbase. One, I want to make sure I do pay taxes on it. I'm not trying to get nipped on the other end for doing something stupid and keeping a little bit extra.
Well, yeah, and Coinbase will kick you the 1099s, whatever you need.
Yeah, and I figure as I pass stuff through that, it helps me keep track of it. Yeah, sometimes people complain about the fees, the small percentages, and Coinbase is still there. If you pay an extra percent, it's still there, and FTX ain't.
Yeah, and I would say that, like for storage and new buying experience, that's always where I recommend people to go. But then if you actually want to trade and swap crypto around, then you would want to move it to probably Binance or something that has a much lower fee to do that, because you do get ganked.
But then as we've said,
what are the difference in fees?
Should you be trading so much that you notice the fees? And if you are, you're in a different game. But most people aren't. We're not day traders, and most people who think they are probably shouldn't be.
Yeah. Is there a single person who's a day trader that would be good at it?
It kind of depends. I mean,
Twitter.
Could anybody beat the market?
Yeah, for sure. No, it definitely is possible. It's definitely possible, but it's more, you have to think of it more like a sport than anything else. Like most of us do suck at sports. There are elite athletes, but trading is not for anyone, and you can't just jump
and it's
up
probably
on your
more
couch
luck
and be like, I'm going to trade now. Yeah, you got to probably read 4 hours a day and then it's
I don't know.
Like
does a human really have that ability to absorb that vast amount of information and those vast variables and actually make a decision and win, and it not just be more than luck?
Yeah,
well, you know me. I'm
a
long-term market average guy.
When we see the people who consistently won over time on Twitter, but it's very few, and they're very devoted to it, and they're very emotionless about it.
They're consistent, or they just win one year.
They're consistent workers. They're not.
I bet if we went out and looked that they aren't any more consistent than the market average.
Well, that's the thing about trading that people don't think. You think it's you win or you lose, but actually trading is about basically getting yourself to 55% win rate and maintaining that, and
beating the house casino, so to speak.
Exactly, yeah. And the way you do that is you set stops. So if it falls below a certain price, you're out, and you just have a rule not to get back in. And if it goes up, then you wait until it goes 3 times that, and then there's a math equation where you basically try to maintain that 55%. But it's a very hard thing to do because then you basically have to be a robot and you have to like study the markets all the time to understand like
Right.
what kind of volume affects what kind of things and what happened in the news. And so like it's a full-time job to earn a percentage on money you're investing yourself. So it's pretty stressful. Is it possible? Of course. I mean, there's huge amounts of
Hmm.
industry built around this, right? Like the best traders in the world are like skilled athletes at their game, but
But there's
there's also a lot of
very
people who thinks like,
few, right?
yeah, and
And
it
It's
just
how many of
you can
them?
lingers a
hop
lot.
on the court, so to say. Here, we can go and start leverage trading, but they don't let us on the NBA courts. So there's a few guys who play in the NBA, 0.10001%. They're awesome. And the rest of us who like to ball at home aren't allowed on the court. The problem is in crypto, we can jump in and 20x leverage and then realize, no, that's why they don't let you on the court.
Yeah, the court is lava.
Yeah. And how many of them do regular weekly podcasts?
Quite a few. Yeah,
Ched's
like I
Okay.
has a
could.
Monday Open with him and Ledge.
So are we on the track? I guess what I'm trying to say
Crypto
to
Cred
meet
does a
those
good
people.
one. Don Alt does a good one.
Oh, yeah.
There's a lot of good ones, but the people I
Jim.
mentioned, I think we followed them for years on Twitter before, right? You don't follow the next person who says they have a win rate
Right.
Yeah,
because
exactly, for sure.
you got to learn from people. But right, everyone's LARPing on Twitter. Who knows who's telling the truth
And it was
and
pretty easy to
who
have
you're
a win
learning
rate
from?
for some of the surges in the day.
Sure, yeah, exactly. And that's why I only ever play trading games during bull markets. Right now, I definitely wouldn't. I just don't think I'm good enough to compete against the small pool of money that's available,
Right. So
essentially. And
you want to have a
I,
high win rate when everybody else is winning. That's probably
yeah,
makes
I
sense.
like playing games on easy, and I
Yeah.
like playing them never on hard.
That's funny.
Hmm.
All right, let's talk about maybe something that isn't so easy, and that's interoperability in the metaverse. Now, we talked before the show. We're going, I'm thinking VCR, beta, non-beta, but we have USB standards. Standards all over in the industry. The track gauges and railway things like that.
Hmm.
Like if we all had the same in every country, it'd be a lot easier to connect. So, are you talking about the same sort of thing that we could operate, work in the metaverse, and have the same standards?
Yeah, kind of,
And who's
or at
going to
least
set that?
same standard approach. It's
Oh,
more kind of
okay.
like
Tell me
what.
the difference with that.
So let's say, for example, like the internet, for example, most people are like, oh, the internet, that's a whole bunch of different websites and whatever. But apparently, the internet's like run 60% of the webs of the internet is on WordPress, like 60%, which
60.
is just,
I used to tell people
yeah.
30%. Dang.
Yeah, no, it went up a lot. I mean, well, at least this is
With
like
that
2 years
darn
ago, last
pandemic,
year for
everybody
me.
jumped to WordPress.
Hmm.
But I'm sorry, go on.
Yeah, totally. So WordPress is just like this huge backbone for the internet, but nobody even knows, right? I mean, I know how to use it, but I mean, we all know how to use it because we're tech nerds. So most people don't even know what WordPress is. And that's because like WordPress basically just takes stuff and makes it interoperable. Like, okay, you can put YouTube here and you can put this here, you can put this here.
Mm-hmm.
And so like all that kind of exists for like regular things. Wikipedia is another example. It's like, here's a way for you to organize data and have it plug into each other and let everyone edit on it. Google. Um,
Your
so
email, right? We
basically
can
that
send
needs
email
to,
in SMTP, but everybody, Google, Yahoo Mail, Outlook, you get it the only way you get it, but that backbone, people don't talk about, hey man, what
Right.
SMTP client you using?
Right.
yeah.
And
And
that's a
so,
classic backbone example for a
yeah.
long time now.
And so
Go on.
this is, yeah,
TCP,
then
IP,
this is
et
the
cetera.
Yeah, exactly. Critical point, but that's Web 2, right? Web 1 and 2, that's like point to point. This is how it is. Whereas in Web 3, in the metaverse, things need to be much more interoperable in a live, fluid way, in kind of like ChatGPT, you think about, or ChatGPT. You just give it a prompt and it gives you an answer, and you're like,
Hmm.
okay, I like it, I edit it, I put it in. It's a different way of thinking about the way you solve something, and the way it does it is it kind of like formulates kind of what you're thinking about, and then you edit it a little bit to what you need. That's what interoperability should be like, right? You should basically be able to source the world of data that exists to kind of come up with a general idea of what you're looking for from AI and then kind of manipulate it to be the final product instead of having to build it from scratch every single time, which is our current model. Like every WordPress site comes to scratch from like hello world, right?
Right,
But
right, right.
imagine if you're just like, okay, I need a page and this is currently possible. I need a page that does then you launch yourself into a next level of productivity because you eliminate, remember those days where we just spent like days building a website, tweaking this and tweaking that.
Right, yeah,
So,
yeah. They actually were fun days,
Well,
but
it was like
yeah,
adding
they were. It was
widgets
good.
you
It was
thought you
from
were cool. But yeah.
finding a widget,
yeah,
adding
yeah.
the widget. Now it's all built in of add timestamp, add a Shopify. I mean, adding a Shopify widget is like a widget that then has a credit card widget behind it that then And it
Right.
used to be that you had to go out and figure out. Actually, a good friend of ours, James Medina. Actually, Mike, you might know the Medinas. Um,
Hmm.
but
Monkey Gold.
invented a credit card payment system because people needed this back in the day. There was no plugin. People were finding there were multiple different competing systems. Now you click one button on Shopify, or sorry, on WordPress, and 60% of the world is the same thing.
Yeah. Stripe
It's
probably.
just
Yeah.
there, right? You're not coding anything. It's great. It's built right in. You don't,
Exactly.
and more importantly, you don't think about it.
Okay,
Yeah,
so we
and
got we
that's
got our
great.
outside examples. David, tell us about, I mean,
Hmm.
what are you looking for within the metaverse? Like what interoperability do we need?
Well, exactly. I mean, all of the stuff we've talked about is great, but it's really only about static data. Like it's kind of like a snapshot in time of what happened, and then you
Okay.
send it somewhere, and it's like, okay, this is cool. But for us to really like essentially live in the metaverse or expand and use the metaverse in a real way, you need to actually have all the data like interoperably flowing just really easily. You don't have to, oh, it would be really great for us to have a model of a car here. Can you build a model of a car, dude? And like a week later, you get the model of the car and you put it in. It doesn't, there's no efficiency to using it. And there's this like hill to climb is massive. But if you create interoperability layers,
Uh-huh.
it's kind of like data lakes, and basically a way for you to plug lots of data into a way of thinking, like a translate, like almost like if you think Google Translate and they just keep adding languages.
Mhm.
Google Translate isn't adding languages; they're just pointing to an API of a language, something or other that pulls that in, and
So
then it
you
does the translation. And so that
using the
interoperability
I'm
is
going back to your car example. Would that be like it would a platform of a car would already be there, and I would just add on my
exactly.
my version of it rather than having to build the platform?
Well, and your
Yeah,
version of it could work with an engine that's up there because if you didn't build the engine and they configure the data separately and you're going to build a car model, how do those two work together unless you build both? And there's that
mhm.
interoperability so then the data can transfer through and start using things that other people create. So then you're building on other people's creations too.
Right. So back to the engine example, that I could choose from maybe 100 different engines depending on my need, and it allows
Mhm.
for innovation and creativity.
Yeah, even though those were made by different companies in different parts of the world with
Right.
different specifications, crazy American specifications like
Right.
Fahrenheit and whatever, they will still work because you need an elastic knowledge graph that does the translation to
Right.
allow a Toyota part to suddenly go into a Ford part. Just if someone was, I mean, I was actually thinking interesting the other day about a practical example is imagine if you wanted to like race in the Formula One from your couch as Charles Leclerc against him, all
Mhm.
the data coming from his car could be pumped through this and then into your VR headset. And so you're actually racing under exact conditions, not a certain simulation of what he's done in the past, but there live on the day, the right weather, what his car is doing. If his car has an error, your car has an error. That so like much more real virtual reality. It's not like a simulation anymore. It's like moving towards like
Sure.
what's the
Okay.
middle ground between those
So,
two.
so the issue though is really isn't the technological hurdles to do it. It's people willing to do it. You're facing the same thing with SEKAI, right? Like you want to grab a bunch of different, say, transportation data, but doesn't mean I'm going to share
Mhm.
it with you because I might have a proprietary interest or think I do at least, and sharing
Mm.
it. So how do we?
Well, there was
Isn't
no
that the bigger problem to solve?
But
Well, that's it.
sharing it
There
is
was
what
no way to
the
there was no
paper's
way
talking about, yeah.
to translate it essentially.
Oh,
Yeah, like
okay.
you can't that the interoperability layer is for in Sakai's case, we're using it for data and data modeling. In crypto, interoperability is massively important for going across different
Right.
chains, and there are like bad examples of that right now, which are like bridges, which is essentially you have I get really nerdy now, but okay. There's a consensus layer happening on Ethereum, and there's a consensus layer happening on, let's say, I don't know, Cosmos. And then if you bridge between those, most bridges take these two consensus layers. This one's very powerful. This one's also quite powerful, but not as powerful. And then they take that security, put it on one computer and destroy the power entirely, and then send it over here. And hackers come in here, and that's how the wormhole hacks and all these other hacks happen because you're totally destroying the purpose of crypto to
Uh,
actually have that security crossover. So most bridges are not built that way. So interoperability is a huge issue. And in our case, data interoperability, this is kind of similar, but on a more industrial side of doing things where, yeah, the same problem exists where you can't really bring it in without somebody building something specifically for these assets. But instead, with a translation layer, you can essentially allow people to point at things that already exist and say, okay,
right.
now have them, point into this metaverse or that metaverse.
So you're saying this paper, which talks about interoperability, is still we're still at the level or the layer where we have to have the ability to be interoperable. and then
Hmm.
the
Yeah,
next challenge is to get people to participate.
exactly. Yeah,
Yeah,
for sure.
I think people want to participate. It's been a technical hurdle to get the technology up there, and that's just something that
Okay.
you know
So who's going to
is
set that
unsolvable.
standard then?
Sakai.
Probably, yes, yeah,
There you go.
exactly. I mean, well, I think it can
Not because
just,
2 out of 3 people work in this podcast work for them, but go on.
yeah, I know, exactly. I mean, but there doesn't need to be because there is already the way to be interoperable. It's just very slow. So if you wanted to build, I don't know, like a interoperable, factory, you could do it, and it just takes lots of time, and you have to find all the data and engineers, and you build it up from scratch. If you have a translation layer, it's almost like you upload it to
Hmm.
GPT. It does it for you and says, "Is this kind of what you want?" You say, that's it. Okay."
Uh-huh.
And so that's the next step, and then from that come the innovations.
Yeah, and I think that's what we were saying. Maybe it's not a standard to build to so much like TCP/IP, like we were saying, but it allows you to use 3 different standards and translate between them.
Yeah, and
Okay.
to reach current industry standards that already exist, rather
Okay.
than
Well,
creating new.
maybe we should switch now to people have ideas for this, but yet they get a little hungry. And Jeff, you're going to talk about this Launchpads today, right?
Ah,
They
Lunchables.
gotta
Um,
love a dad joke, halfway through a podcast.
Launchpads. We started talking a couple weeks ago and last week, really, that there's as the bull market comes back, people are new to crypto. Maybe new people watch this. What's the bullshit we've seen before, and hope that people don't get caught up in. Launchpads. They are they're companies that will help incubate and mentor new crypto projects, usually for a portion of the tokens in return, and then get some advertising, get them some users, and help them kind of make their way into crypto.
Kind of like an accelerator in the tech days.
Yeah. The
Okay.
problem is that barrier to entry, right? It's easy to start. So you have a lot of well-meaning people that get involved with these. There's a good
You're
project.
just real quick. You're saying the barrier to entry is too low, or is low
Yeah,
at least.
yeah, is low. So people can go to Launchpads and say, I have an idea, but they don't have enough crypto experience. They don't really understand the tokenomics, and they might have good intentions. And they go to a Launchpad, people advise them about how many tokens to make, and then they take 15%. Then there's what's called a release schedule, right? The founder can sell their 10% of tokens in 2 years. The
Hmm.
Launchpad can sell the 15% they own in 6 months.
Okay.
And as they launch it to the public, the founders might have built up a Discord, a community, they might have been doing other work and have a solid idea. But now that because they're new to crypto, because somebody's been helping them with this launchpad, this kind of accelerator, like you said, is more of a predatory dump the
Mm,
tokens before the founder does,
right.
dump them on the
Get the money
users.
and leave. Right.
Yeah, and there are good ones. There are good founders and good launch pads, but as the bull run starts up again, right? Prices are up, and I know we think we're going to have a little dip and continue, but just going forward the next 2 years, the more money there is, the more people come in to steal the money. And
Sure.
take a look at your great projects. Take a look at who's behind them, and in a good way, and also in a kind of a skeptical way of the people supporting them. Where did the tokens go? What's that the whole we say FDV, the fully diluted valuation? Who holds the tokens? Where are they? Um, and
And
then
there's going to be launch pads that have a good of
yeah,
integrity. They have a good
for
reputation.
sure.
That if you were to see them as a backer, you'd be like, okay, they have a good track record. They don't sell out, let's say in 6 months.
Yes, there
Yeah,
are
there's some
some good
very
ones.
famous launch pads, and a lot of great coins have gone through them. And so, like, I mean, like Binance Labs, and
Hmm.
CoinList, I think are very good ones. But yeah, exactly. I mean, I think it's less that people are trying, the launch pads are trying to, I think, work these well. I mean, some are definitely trying to work over projects, but I think it's more when you sign up to a deal like that, you're basically promising that, like, in 6 months, my project will have achieved so much that
Hmm.
you won't want to sell your token. And there's probably going to be enough people to buy it
Bullish
anyway. So,
unlock.
exactly, yeah, right, a bullish unlock. And so that is in a desperation to raise money. Founders got a lot of stuff to do. I'm sure they're just like, okay, I think we will be successful. And even if we're not, I'm sure it won't be too bad. It's very important to look at your tokenomics, and it's very important to understand what you're signing up to and why not. But yeah, I mean, I think generally up front, it's launch pads that charge a big upfront fee, promise a bunch of things that come later. That's, I don't know, a sign that you're kind of in a little trouble, rather than someone who's like, okay, we want to work with you. We're going to take a risk with you. We're going to take this many tokens of yours, but we're also going to introduce you all the people, fundraise with you, and be your Y Combinator type situation in crypto. So there's like this. There's this huge range, and I think one of the hugest problems in crypto, sadly, is that the market makes itself. And so essentially, if you have a huge quantity of scam tokens that just exist, then there's going to be a whole bunch of like launchpads that cater to that situation. And so
Okay,
trying
sure.
to find
Yeah.
what the difference is and where you fit in that matrix is kind of it's a bit of a maze.
Okay, can I do this on Coinbase?
You can try and go with Coinbase Ventures.
Yeah.
Yes, it's a
They
Oh,
have-
there is. I was just kidding.
They
'Cause,
do.
I mean,
Yeah.
the kind of person that is interested in this either knows what they're doing or I guess is
Although I would say
aspiring to
that
know what they're doing.
the history of Coinbase Ventures is not
Not good.
great.
Okay.
It's just launch.
Yeah. Well, it's like any venture thing, like you get one or two that go, 100x and everybody else fails.
I guess that's the way of looking
Yeah.
at it. Yeah,
If you bet
I
on
think
all of
crypto
them,
people.
you're gonna
I'm
come out
happy
The
ahead.
problem with
I'm happy for everyone to fail. I hate it when they rug.
Yeah. When they pull the
it's an
money right out.
interesting. I think it's a really interesting way you just put it, Mike. I never really thought about it that way because
Well, that's
your
your
traditional crypto will come in. Like a person will come in and be like, I'm into this protocol. I'm going to devote my life to learning all about
Do a
it and
single
joining
one.
Discord
Yeah.
and being into it. Yeah. And what you should be doing is buying like 30 and just hoping for one of them or two of them.
Right.
That's the venture approach. It's really interesting you brought that
But
up,
that does
actually.
not cater to the obsessive personality, the OCD that many traders have, which makes them think they're actually good at it when they're
Yeah.
not.
No, well,
But we
absolutely
need them,
right.
otherwise Bitcoin's not going to go up.
Yeah, it's the market, right? It's a casino,
Mhm.
right? It's there are winners and losers, and there's a lot more
Yeah, they
losers.
spend half their time on sports betting and the other half on crypto.
Well, I mean,
Yeah,
Dave's
there's a lot of sports
description is
betting happening
how I
right
did
now.
well. I don't talk about the 27 coins that went to zero or we don't have a chain anymore, but I bought Matic and Vet like below a penny and below 5 cents, and a whole bunch of other coins at the top.
Does that make you smart or lucky?
I take a smart
Both.
approach, and then
I
for the
see.
ones that get lucky, I make sure to take my money out and not try to ride them up and down. And the ones that go down, hopefully I'm smart enough to pull the plug before they go to zero. But
Right.
it's a lot
And
better
you-
than picking two and you're wrong twice. You can pick 30 and be wrong 24 times.
And you know how men
me check.
generally overestimate their abilities.
Let me simplify the situation. Sorry, my dogs are chewing on stuff. Hey, stop that. Anyway, let me simplify rapidly. Every once in a while in crypto, there's a situation where a big target with all those balloons is on it, and
Mhm.
you're allowed to stand like 5 feet from it and just
Mhm.
throw as many darts as you can.
Mhm.
Don't just throw one dart at the same thing. Just all the darts at once. Wait, and then sell it all quickly.
Okay.
Like that.
That's good. Somebody should make an NFT of that, Jeff.
Yeah, that's a good idea. There you go.
Yeah.
Next
Okay.
idea.
All right, why don't we wrap it up? Our prediction was what, 28
Oh, we got recessions.
today?
Yeah,
Oh, we got to talk about recessions.
recession.
Okay,
Yeah,
let's talk
yeah.
about something uplifting then.
So I've got this chart up, and it's the last couple rates as the Fed keeps raising rates, and I want to make sure we talk about this today because they are going to announce today either a 0.5 or a 0.25 raise. And
0.25.
when
We're betting on 0.25, at least the market is.
well, and my point being,
99%.
until we're betting on zero, the recession's still incoming, and
Mm-hmm.
there are many factors that are the recession. There's the whole 2 quarters of negative growth or zero growth, and then there's people saying, well, we've already had that, right? You can change your indicators. I'm looking at the Fed changes theirs based on the other data. So whether or not you believe it, they're going to change rates based on that. And the recessions happen when they're done raising rates and they start lowering them because things have gotten too bad. And a lot of this is the catch up of how many months behind the interest rates on houses and credit cards and cars go up for Americans. And you can make it for a couple of weeks, you can make it for a couple of months. Maybe it takes a year to catch up. Or maybe you have a house that didn't keep going up in value, and in a year you need to sell. So it's these lagging indicators, but it's also people's lives, right? It takes a while for things to catch up. And while we're wondering if it's 0.25 or 0.5, the other idea is it's going to be a recession when they don't raise it. Maybe
Yeah, well, that's assuming it's going to go, which historically it has. That
based on
the Fed's
historical
going to
data.
put the economy in a recession in order to kill inflation.
And we
That's
haven't done crypto
the
in
traditional
recession,
model.
so does Bitcoin work properly when they start printing again, or are people really hurting?
No, it'll be tied to the S&P like it always is.
Okay, David. Unmute. Yeah.
In
At least
yeah, yeah.
historically speaking.
Yeah, I think there's definitely. I mean, there's the thing that is interesting about saying it's tied to the S&P is it's like the thing is Bitcoin goes up like 5%, and while the S&P goes up 1%, and then it goes down 1% when the S&P goes down 1%, and so
Right.
it's like it's correlated, but like its delta is just like much. So it's like saying, I don't know, driving is correlated to dying in the end. It's like, yeah, it does happen that you die and you also drive. But
Well,
it's like,
and the correlation, we're pushing a lot of money in as Americans when the S&P goes up. The rest of the world, and David was talking about this last week, if you're in Turkey and Venezuela and your economy's blowing up, if you're in Lebanon, you're Lebanon,
Right.
you're best desperately trying to buy Bitcoin, and that's that extra 5%, while the Americans push up the S&P and Bitcoin one. We're kind of consistent. As more countries go the Lebanon route, there's less and less Bitcoin, even though
Well,
there's
that's a
more and more
negative outlook
stocks.
as more countries go to. If how about an if more
If
countries go to
I don't
Lebanon?
hope for it, I'm just aware, and I've seen it happen again and again and again. So
well,
reality
Argentina
tells.
is looking at merging its currency with Brazil, I just heard recently, and
Really?
that's interesting because Argentina's credit rating is so low because they've gone bankrupt like three times. So who's going to lend to
Hmm.
them? So they
Right.
so it's an interesting kind of movement in the global scene in money. I don't actually believe that Bitcoin is as tied to all these macro things as everybody thinks
Well, either they are
because,
or they aren't. That's a pretty. It's a bit of an empirical question, right? You can just look at the data.
well,
Aren't
I
you?
mean,
Aren't you the
because
one who
if
says it is? I'm just sort of
well, it's one of the factors. So it's kind of
postulating.
like looking at a picture in black and white and saying, okay, I understand the picture. It's like, well, okay, kind of. Like if you look at the other factors as well, you also look at like, okay, so how high will it go while it's
Yeah. Okay.
correlated to the S&P, and how low will it dip and whatever. And so that indicates how much buying and belief there is in the markets based on risk assets and stuff like that. So I mean, I think that in the moment while S&P is going up, I mean, and if Fed rep only hikes by 25%, speaking of which, did they announce already? That's crazy.
I don't think
Um,
so. Well, we're at
no,
0.19
no,
right now.
that's at 9. That's at
Okay.
evening. We've got Jolts, I think, just came out anyway. But essentially it will be tied, but it's more important to kind of think about Bitcoin to me anyway as a like an asset, like a luxury asset. Who's buying Bitcoin? It's people who have money to spend on internet money. It's like I'm buying more money to.
Make money.
So
Yeah.
Hmm.
right. And so who are those people? Those people are relatively well-off people. And in a recession, who's doing poorly? It's not them, right? They're the guys who are making millions of dollars off eggs. They're not the guys buying the eggs. Like
Hmm.
egg buyers are not Bitcoin buyers. It's egg sellers. And so like you actually see in recessions luxury goods like art and stuff like that get sold and moves up in value. And so it
Mm.
starts to do weird things. And so I would like if you just look at the cycle of Bitcoin, it's more kind of like if De Beers cartel owned Bitcoin instead of diamonds, it would do a similar thing because that's what De Beers does, right?
But isn't what about the? Aren't you leaving out the retail investor, the person who's hopeful and invests? Does more the lottery thing. I'm going to put into Bitcoin to change my life
I
instead
mean,
of
yeah,
just to continue to
as
make 55% of the time
yeah, I
or
mean,
win
if you bet
55%
long
of the time.
long term over Bitcoin, that's the way you should do it. You should just bet long term buy and then just hold for long
Right.
term because it is likely to continue to go up. That's the way it works. Like more and more people get involved and more people take part in
Right.
like
That it
I
has
mean,
worked for you.
yeah, until like you get like the S&P, for example, everyone thinks like, okay, it's got to be like, these GME traders, whatever. S&P is controlled 99% or like something like that by like 0.1% or I think it's 0.01% of institutions and people.
Hmm.
So like what the S&P does on a daily basis is not at all dependent on retail. Retail is just along for the ride. And
Hmm.
so they don't think that, but that's the truth for sure. And so like it's kind of a similar, I would argue, a similar situation for all major asset classes. People think that they're moving it, but actually it's larger people taking bets. So
Sure.
you look at people who
Or
have
the
like
whales in
held
crypto.
Bitcoin. Yeah, people who held for like 6 years and are not selling. They're actually buying more at the moment if you look at the chain data. And so it's kind of like you see people who are like, oh, it's cheap now. It will be more expensive later, as it always is. And they just kind of go with the flow. And it's the business cycle, right?
Right.
Nothing goes to zero. It's not like, oh no, there's gonna be a recession. Everything's going to zero. There'll be a sharp spike down. Everything will get oversold, and then it'll spike back up, and then we just keep going because
Uh,
that's how it works.
that's it has worked, yes. So
Right.
you're more optimistic than me, so I just never know. Right, we should probably wrap this up. Bitcoin was supposed to be at 28 was our prediction this week, right? It's at 20,
26,
oh,
but I said
23 right
20.
now.
It's locked at 23 until the FOMC
It has been
comes
locked.
out. And,
Okay.
yeah. Well, and so
The
it's
Federal
basically
Open
stuck
Market
there.
Committee, is that what you're talking about? Until today. Okay.
Exactly. Well, basically the CMI print, like CPI. If they print 25, that's what everyone expects. That's bullish enough, I think, to push it to 26. If they were to suddenly print 50, yeah, it would go back down to like 19 or something like that.
Okay. So
I think
you're
all
gonna
markets,
hedge your prediction wisely.
yeah, all markets would do that. And why would the Fed do that to all these stocks that are just battered? So I don't think they'd do that. It's more like there's also the crazy upside of like, what if it was 0? That would be crazy. Then it would just go to like 30.
Yeah. All right. All right. We have less than a minute to go in our time here.
23.
Seconds. Yeah.
No,
This gentleman, it's been
23K.
wonderful. 23K. Okay.
Okay.
23, 26, and I'll go just whatever the market said. 0.25. I'm up for 26. Otherwise, a 0.5 rate, and we'll stay at 23. I bet we go down actually. All right, gentlemen. We'll see you next week.
Have a great one,
Oh,
guys.
yeah?
Big announcement coming soon. Yeah. 5, 4, 3.